What happens when the world's biggest economy goes to war, or even teeters on the edge of one? As tensions flare between Iran and Israel, and global powers pick sides, many are asking, what would war mean for the U.S. economy? Would it crash or surge? The answer might surprise you. Let's go back in time. War, while tragic and devastating, has often been an economic engine for the United States. World War II ended the Great Depression, pushing U.S. GDP up 17% in 1942 alone. The Korean and Vietnam Wars led to booms in defense spending and industrial output. Even post-9/11 wars in Iraq and Afghanistan created surges in defense stocks, government contracting, and energy investment. Why? Because war mobilizes massive public spending, especially in sectors like manufacturing, oil, technology, and defense. In many cases, the stock market doesn't collapse in wartime. It adjusts and sometimes climbs. The recent escalation between Iran and Israel has sent shockwaves through global markets. Iran has signaled its willingness to retaliate, not just regionally, but through cyber attacks, oil disruption, and proxy groups. And with Israel's powerful military and U.S. backing, this isn't just a skirmish. It's a geopolitical earthquake. While the U.S. isn't directly at war yet, it's deeply involved diplomatically, militarily, and economically. This matters because any disruption in the Middle East, especially involving Iran, has one key word attached to it: oil. Iran controls the Strait of Hormuz, a narrow passage through which 20% of the world's oil flows. If Iran shuts it down, or if shipping is disrupted, global oil prices could skyrocket overnight. And what does that mean for the U.S.? Gas prices go up. Shipping costs rise. Inflation accelerates again. And the Federal Reserve is put in a tough spot. Remember, the U.S. spent most of 2022 to 2023 battling inflation. A war-driven spike in energy prices could force the Fed to pause rate cuts or even raise rates again. That's bad news for consumers and potentially for the stock market. But not all sectors lose. In fact, some thrive in conflict. Here's who stands to benefit if tensions escalate. Defense contractors like Lockheed Martin, Raytheon, and Northrop Grumman. Cybersecurity firms preparing for digital retaliation. Energy companies in oil, natural gas, and pipelines. Commodities traders who profit from price volatility. In past conflicts, stocks tied to defense and energy have surged while broader markets wobbled. War doesn't just shift headlines, it shifts money flows. Here's the wild card: the U.S. dollar. When war breaks out, especially outside American soil, the dollar tends to strengthen, not weaken. Why? Because global investors see it as a safe haven. During the Russia-Ukraine war, the dollar surged as capital fled from riskier regions. If the Iran-Israel conflict widens, especially with cyber warfare or oil sabotage, expect the dollar to rise again, alongside gold, treasuries, and commodities. This could mean stronger U.S. purchasing power abroad, but weaker exports. If war drags on, it puts the Federal Reserve in a difficult position. They'll have to balance inflation risks from energy spikes, support markets with liquidity if panic spreads, reassess their path for interest rates. Wall Street, meanwhile, will look for two things. 1. How long will this last? 2. Will it drag the U.S. into deeper involvement? Short conflicts tend to produce short-term volatility, followed by recoveries. But prolonged instability, especially involving oil, could lead to stagflation, a deadly mix of low growth and high inflation. Final thoughts. What comes next? The U.S. isn't at war. Yet. But when superpowers are pulled into regional conflicts, the economic consequences ripple fast. War brings unpredictability, but it also brings opportunities for investors, for industries, and for geopolitical strategy. The key is to watch the signals: oil prices, Fed announcements, military deployments, and market reactions. One thing is certain: America's economic machine is resilient, but not immune. And if history is any guide, war doesn't just test diplomacy, it tests economies. If you found this breakdown helpful, subscribe to Finance Related 101 for more clear, compelling insights into how global events shape your wallet and your world. Stay sharp, stay informed, stay prepared.